Welcome to MarketTamer.com. Let's take a look at a chart of the S&P 500 today. It closed up 2.58%, up 23.73 points to close at 942.87. And what's really interesting about this is that, first of all, it's closed above its 200-day moving average. We'll talk about that in a few moments. And it's also closed above its Bollinger Band. These two resistance areas were intersecting. So this was staunch resistance. We also had resistance from earlier in the month in May. Closed above all of those resistances today. And what's outstanding now is a swing high from January, which is right around where the market closed today, just creeping to that level. And if we move to the next chart, we can actually see what's happened with the Dow Jones. The Dow has really been the laggard in this move up. Not necessarily that the move has been poor on its own, but relative to the S&P 500, relative to the NASDAQ, the Dow has fallen behind the two. And we can see that in the sense of the 200-day moving average again. For the Dow, it's just about hitting that 200-day moving average. If we take a look at the NASDAQ, we commented last week that the NASDAQ was actually the first index to break above that 200-day moving average, and it did so very convincingly. It's continued higher, substantially higher than that level now. Again, it showed a very, very big move today, up 3%. If we return back to the Dow, we can see the Dow moved 2.6%. We can also see that the S&P moved about 2.6%, just under at 2.58. So of all the indexes, yet again, the NASDAQ is the one that in percentage terms is leading the way. It's leading the way technically also. Moving on to Cisco, we can see it had one of the biggest moves today, 5.41%, up $1, closing around 1950. And we can see the gap higher. Why was a gap? Well, Cisco was added to the Dow Jones Industrial Average today, and it replaced General Motors. And if you're looking for an interesting trade on Cisco, one possibility is a bull put spread right now. Why is that? Well, with many money managers looking to own Cisco as a result of its addition, that should create some support. If we look at some of the intersections here, we've got a 50-day moving average, 200-day moving average right around 18. We've got a technical support area through April and May right around 18. And we've got support fundamentally from the addition here. So lots of things supporting a potential bull put at strike 18. Of course, there will be earnings coming up in July. That's where much of the premiums are at strike 18. There's some premium for June, but not nearly as much as July. And there are some good returns. In fact, something like an 18.14 or 18.15 bull put spread brings in a pretty decent rate of return, certainly a double-digit return right now. Moving forward, we can see the commodities. Commodities had a tremendous run. For example, Freeport-McMoRan, it's been an uptrend all the way through the year, and there's a rising channel here. And again, very big move, 6.78% today. That was echoed in a lot of the stocks today in the commodity sector. We look at BHP Billiton. It's also had a very big move outside its Bollinger Band. Since 95% of all price data is comprised within those two bands, we would anticipate that there will be a retracement at some point here. No stock ever stays above its 5-day moving average for any extended period of time, and right now BHP is considerably above that. Finally, we'll note the laggard of the day. That was gold. Gold was down for 47 cents or 0.49%, and yet in spite of that slightly reduced move today, in the sense that it really fell behind all of the other indexes and stocks on the day, especially the commodities. Nevertheless, it's still in a bullish trend, still above its 5-day moving average, not even touching its 5-day moving average after today. So with all that said, we'll invite you to come on over any stage you wish to MarketTamer.com, jump into the classes here, chat with the pros. We're here to help, and we'll look forward to seeing you.